Hello, Breakout Boy here from HowToTradeBreakouts.com. Just going to talk a little bit today about trailing stops on the IG markets platform. It's the platform I use the most because of the quality of the product on there and all the options you can use. So essentially, you have to turn on trailing stops if you want to use them. So where you can find this is you go to My Account. Wait for that to load up, and then into Settings, and so double click that, right to Preferences, again wait for that to load. Preferences, come on, and then if you scroll down you've got trailing stops. You have to click here, allow trailing stops, and go to the bottom and set preferences. Once you've closed that, you can now look in your deal tickets and you'll find the option to put a trailing stop in. What that means is when you've got something that happened yesterday in the FTSE where it broke through this range that's been bouncing off since the sort of 29th of February roughly, it hasn't looked back. It's just gone through and broken and broken and broken. If you were to just leave your stop in, you wouldn't necessarily, and it was to come back, you wouldn't necessarily capture as much of the move as possible. What I'm saying is I set a target of around here of the break, got filled very nicely, never offside, but then if I'd have instead had a trailing stop, I would have got much more of the move out of it and made a lot more money. So what I suggest is use trailing stops if you're expecting a big move. Perhaps one of the downsides of the system is that I like to use guaranteed stops as well, which means that whatever happens, you're going to get the price that you ask for when you get in and get out of your trade. That means there's going to be no slippage and no room for any funny business. It does mean you have to pay a bit of a premium for it as they widen the spreads on the market. But unfortunately, you can't use guaranteed stops or limit stops. Sorry, trailing stops together. So you really have to make up your mind if you want to be willing to accept a possible bit of slippage. Then I'd definitely go with the trailing stop, unless you're going to be holding it for an ultra long time and you're worried that the market might be closed. Say when it goes through your price. In that case, guaranteed stop is quite good. If you do use guaranteed stops, you can always change the stop manually. So as the market moves up this way, you can move the stop incrementally further and further and higher until you get stopped as it comes back, as it has done up here. So if we just have a look at the deal ticket, we go to the FTSE 100, you click down here, order to open, and you see on order to open there's no trailing stop option. So if you are going to put in an order to open, so it's all basically an automatic trade. When it hits your price, it will trade for you, which is the way I like to do it. You can't have a trailing stop. So if you're going to use a trailing stop, it's going to be something that you initiate now. So you click on the deal thing, the deal tab here. You can see you've got guaranteed stop and trailing stop here. So you put in the size you want to use per tick, the currency that you're using. You can do a forced open to make sure that whatever happens you get into the market, even if the price moves away from where you click on here. And then you can set the stops, so if the market goes against you, where it will stop out, and the limit is basically your target. But you have to choose either guaranteed stop or trailing stop. You can't have both. Both of them will add. The guaranteed stop adds an extra 1 point spread up here, so you're paying a bit more. The trailing stop is a nice little function. It doesn't cost you more actually, but it there's a minimum of distance you have to have to activate it. So what I'm going to do is I'm just going to put in a stop just in case there's a retrace back here. We've had a nice break. We've taken some money out of it. It would be nice to have a second bite of the cherry. So I'm going to put it in here with a guaranteed stop. So we're going to orders to open, buy. Going to go to 6220. That didn't work. 6220. size will be 2. We're going to have a limit buy, which means it's going to buy the market as it goes down. Stop, I'm going to put as, put at the minimum is 20 ticks away, and then the limit, let's put that as, say, we'll start at 60 and see how it goes from there. So just to double check before you hit submit, we've got plenty of time, there's no rush. Buying at 6220, limit currency, good till cancel, stop to 20 ticks away, guaranteed, so it will happen whatever, and a limit phone. So click submit, and then confirm. As you can see, we'll close that. It's come up right here. So once it hits this resistance point, you've got some room for maneuver here, and then a nice healthy upside, so sort of halfway up the where it's been before. So fingers crossed that will get activated, but it does demonstrate why you have to be on the first move of a breakout. I know it's a scary thing because the market hasn't been up here for a long time, but it's even worse for it to go and you not to be involved. So get in. You want to be on breaks that go quickly. If they don't go quickly, scratch them and wait for the next one. Save your money. That's the key to surviving this. Save your money, and eventually you will get on moves like this. And then you've got to run them. Use your trailing stop and try and get as much as you can. Who knows how far this is going to go? It might never see these prices again for years. You know, it might be wishful thinking for me to be here, but at the moment that's my signal. It's a solid trade. If it goes wrong, that's fine. It's worth having a go. Okay, so until next time, go with the flow. Hit those breakouts first time. Trail those stops if you need to, and good luck and best luck with your trading.